Here's a tweet from @Jan5th. David, could you please comment on Magna?
Okay. So I have to go back to the sector again, and really the whole auto parts sector is having some difficulty right now. There are some people who would question the auto cycle. Actually, we think the consumer's in pretty good shape. The difficult part is that Magna sells a lot of stuff into Europe and by nature into Germany. Some of the German car companies are under a little pressure right now. So technically the stock is kind of broken in the short run. I'd like to see the stock turn around before I put some money to work. I'd like to see the sector get a bit of a head of steam. As long as we have concern around the health of the global consumer in emerging markets, there's going to be some concern around some of the global car companies. And so in the near term, I think, again, better spots to be had.
So even though this is a consumer stock in the sense that consumers buy most cars, you're wary.
Well, if you think about consumer-led markets, right, the one that's furthest from China is the U.S. You know, if you look at Europe, they're helped by low energy prices, but countries like Germany and France and Italy sell a lot of manufacturing gear into China, and they're in having a tougher time. So, you know, in grades away from the epicenter, I would say I want to be focused specifically on the domestic U.S. economy. Magna really is a global company selling to global car companies.
We've got Frank on the line from Montreal. Frank, go ahead.
Yeah, thank you, Andy. Dave, Cyber Semiconductor, just about a half of the price that I sold for. Would you buy it at this level? Dividend is not bad, or you have something else on your top pick and stay away from CY. Thank you, Andy, and thank you, Dave.
Thanks very much.
So, you know, it's a good question to look at a stock after you sold it and it's down 50%. And so a lot of people say, well, maybe here's my chance. Going back to process, going through a correction, what is it that's holding up? What is it that's selling off? Cypress Semiconductor is not one of those that's holding up in price. If you were to go through the group, and this is part of my job at Barometer, you know, we manage money for families. They want to be in the strongest companies in the sector. If you were to go through the semiconductor space, I pointed out NVIDIA earlier, which is graphics chips. I would also take a look at something like Broadcom, which sells into wireless devices. And again, the stock has a very strong price pattern. It's behaving better than 93% of stocks in the U.S. market. They've had good near-term numbers. I would take a look at Broadcom as opposed to Cypress Semi.
And just remind us what Broadcom does.
They do chips for broadband connectivity and networks, so Internet of Things and cellular devices.
Okay. And let's head to Mississauga, Ontario. Bruno, you're on the air.
Good afternoon. Thanks,
Hi
Andy.
there.
Dave, I'd like your viewpoint on TD. I've been holding it for quite a few years, and every time I look at their U.S. earnings, they seem to be flat to slightly down. I just want your viewpoint of what you think of their U.S. Strategy going forward, and if maybe I should just get out and just buy a U.S. Bank instead. Thank you. I'll hang up.
Thanks, Bruno.
So, Bruno, you know, you ask a good question because a lot of Canadian investors own a lot of Canadian banks. They've been a great place to be for many years. Remembering that Canada benefited from the boom in emerging markets through the 2000s, and that was a tailwind for lots of industries in our country. I would say at this point, the rate of change in the Canadian economy is likely to continue to slow as the impact of energy washes through the country. TD has done a great job in building U.S. assets, and their U.S. presence is doing very, very well. But again, a lot of the business here in Canada. If the strong part or the part you want to target is the U.S., then target a U.S. bank. And so I would suggest that you take a look at Wells Fargo. And Wells Fargo has a significant piece of the U.S. Mortgage industry. The stock's pulled back as TD has pulled back, but it's into some good longer-term support, and it might be better to look at. I'd also take a look at some of the other U.S. banks, like a U.S. Bank Corp. Also looks okay. In the short run, market's putting pressure on all financials, but I want to try and target domestic U.S. Longer term than I want to focus on Canada right now.
Okay, let's head to Bruce in Victoria. Bruce, go ahead.
Yeah, good morning, gentlemen.
Good morning.
My question is, when the market sells off a lot and it turns around, the first stocks that move up, are they the ones that you should be buying? And what do you think about CVS Healthcare?
Okay. So there's two questions there, and that's a tricky question. it's very important to watch the nature of a market bottom. So first of all, one of the big mistakes everybody makes is you get a big up day after a whole bunch of down days. They jump in, market rallies in the morning and then fails in the afternoon. So what we're watching for in the short run, outside of some of our key indicators, is I want to see a day where the market rallies 2% on heavy volume. And then sometime over the next 3 to 5 days, see the market have another 1.5 to 2% day, or what I'll call a follow-through day. So hold those gains and then put in another up day. And it's okay to leave that stuff off the bottom. Now, there's going to be two kinds of stocks that rally in the beginning of a bounce. There's going to be short covering, or people who are covering things that they sold short thinking that they were broken because they want to take their gains, right? And they'll have very sharp moves higher, and they're enticing because it looks, boy, look at those oil stocks that really had a big day, right? Very often on that follow-through day, those same stocks will not be participating. So you want to look for the companies that were technically sound coming in, where the prices were behaving well, where the numbers are good to begin with. We like to buy good getting better, not broken getting fixed. Because broken getting fixed can cost you a lot if you're wrong, you know. So there's going to be two groups, short covering and some real buying, and you won't know what's real until a number of days into a bounce in the market, which is why you don't want to try and pick a bottom, because the first stocks to bounce often may fail and continue to move lower. And that's happened a lot of times over the last few weeks. You've had strong mornings, weak afternoons. We did it again this morning. We'll see whether the market can hang on through the day. You know, right now, I'm not making any big bets.
Okay. We're going to be right back with David Burrows of Barometer Capital Management. The topic, North American large caps. Give us a call, 1-855-326-6266.